There was a man who made more money than most people could imagine, not over decades, but in incredibly short periods of time. His name was Bill Hwang, and for a while, he was winning big. He stayed out of the spotlight, didn't chase attention, and quietly built enormous wealth inside the financial world. But behind that success, there was a hidden risk, one that many people don't fully understand until it's too late. He was using leverage. Leverage means investing not just your own money, but also large amounts of borrowed money to amplify your returns. When things go right, the gains can be massive. But when things go wrong, the losses can be devastating. Bill made concentrated bets on a handful of companies, and for a time, everything worked in his favor. His portfolio kept growing, and his positions became larger and more powerful. It looked unstoppable. Then, something small happened. The stocks he was heavily invested in began to decline. Not a crash, not a major panic, just a normal drop that markets experience all the time. For most investors, this wouldn't have been a big deal. But for someone using extreme leverage, even a small decline can trigger a chain reaction. The banks that had lent him money began to demand more collateral. These are called margin calls, when lenders ask you to either add more money or reduce your positions immediately. Bill couldn't meet those demands fast enough, so the banks did what they had to do to protect themselves. They started selling his positions. And they didn't sell slowly. They sold massive amounts of stock all at once. That sudden selling pushed prices down even further, which triggered more margin calls, leading to even more selling. Within hours, it turned into a financial avalanche. And in just 2 days, more than $20 billion in wealth disappeared. Not over years. Not during a long recession, but in 48 hours, one of the largest personal financial losses in history. What makes this story powerful isn't just the size of the loss, it's the reason behind it. This didn't happen because of a lack of intelligence or experience. It happened because of excessive risk that remained hidden while everything was going well. That's how most financial disasters occur. They build quietly in the background, disguised as success, until one moment exposes everything. There are a few important lessons here. Never risk everything for the chance of higher returns. If you don't fully understand leverage, it's better to stay away from it. And most importantly, in investing, survival matters more than winning big, because building wealth isn't about making one perfect move. It's about staying consistent and avoiding the kind of mistakes that can wipe you out completely. So the real question is, are you building something sustainable, or are you one bad decision away from losing everything? If this made you think differently about money, subscribe to The Practical Millionaire for simple, powerful lessons that help you grow and protect your wealth over time.